All right, guys. Thank you for coming to the sixth meeting of the Investment Society. So we got another great program for y'all tonight. I'm happy to see some familiar faces. I'm happy to see some new ones as well. And so here's our meeting agenda. We're going to go over some outperforming moments, some super day opportunities. I'm going to hand it off to the market outlook, economics, M&A. Of course, as always, the sweet spot. Got a couple society updates and then the conclusion. And so I like to start it off with a quote as always. This one is from Benjamin Graham, the Intelligent Investor. Wonderful book. You've got your copy. Anyway, from what this quote says. It requires strength of character in order to think and to act in opposite fashion from the crowd, and also patience to wait for opportunities that may be spaced years apart. A lot of in this book, he talks about not following trends or bubbles and what other people are doing in the market, being irrational, also waiting, saving, and waiting for those opportunities that I've often heard from a Goldman Sachs analyst come every decade or so. Right, you'll have one of these events, and that's what their firm rides on. And so for the Super Day experience, these are some ones we got coming up. For the first ones, it's a security service externship. It says learn about their culture, departments, gain valuable experience. And that's going to be on November 4th. If you want, you can take a picture of this. It's November 4th at 11 a.m., 11:45 a.m. For the second one, it says the Shark Tank experience. That's October 28th, on the northeast side of town at their headquarters. And I can only imagine that would be a cool grilling experience. Now for outperforming moments, we need 3. Don't be shy.
Alex. All right, I got an offer today. So
don't keep it close to chest. Who is it? Who is it? Outstanding. That's awesome. All right, we need another one. There we go.
It's not my outperforming moment, but it's my sister's. She got her doctorate yesterday.
Dude, wow. All right, we need one more, guys. Someone new.
Yeah, my hunting sandwiches.
Woo! Thank y'all for sharing that with us. And now I'm going to pass it off to Juan. Get out.
What's up, everyone? Let's start the agenda. First, I'm going to do the internship spotlight, then market recap, then we'll talk about General Motors buying a mining company, then Google and Coinbase, and then we'll dive deep into Google's Q2 earnings. Okay, so first of all, the spring 2019, I interned with a Kirshner trading firm in Austin, Texas as a research intern. So my task, I think I've mentioned it before, my task was to bring information on companies that were reporting the next day, and then talk to my mentor, which is there obviously in the picture. And one of the other cool things was in the morning, like at 6:30 a.m., all the traders would meet in a room, and they would basically talk about their investing ideas for the day. And that was a cool experience. And some of the advantages were, obviously, you learn from senior traders, learn about technical analysis, fundamental analysis, because there's different traders for different with different strategies, and obviously learn from the industry. Then spring 2021, I interned with the IRS, and my task was basically to process all kinds of tax returns, and then based on their protocols, do what was necessary with the tax returns. Some of the advantages, obviously the IRS is huge, so there's a lot of movement within positions. You can change to other positions as quickly as possible, and even when you're inside one of the USA jobs, a job within the government, you can change to other states, other positions around the country. And now the last one. This previous summer, I interned with Wells Fargo in North Carolina as a finance intern. I was placed with the equipment finance division. You can work with different divisions. That was just the one I was paired with. And what they basically do is they buy expensive equipment and then they rent it out or give a credit for it. So for instance, the last week I was working there, they were working with the military for a jet that was $120 million. And they were going to buy the jet and then they were going to finance the deal for the military so they could pay for some years. Another thing they do is they partner with firms and they buy forklifts and excavators, and they rent those out to commercial developers and other buyers. Also, the equipment finance division is huge. They have over 150 employees. They have people in India, they have people in Canada, and obviously in North Carolina. And I was paired with the finance part of the equipment finance, and my task was to produce and present the Q2 to Q1 variance analysis. That basically means I was doing the Q2 report for equipment finance. And the variance analysis part is basically you have to dive deep in what specific areas did we do better? Why did we make more money? Why did we make less money? And one of the things that made it more money in Q2 was the fact that with United Airlines, within their contract, they were renting out 3 airplanes, and they decided to buy the airplanes at the end of their contract. So that boosted the profits for Q2. Some of the advantages you learn from senior managers and directors. I mean, the manager and directors at that level are extremely smart. So you can only learn from them, and they're actually really cool people because they want to have smart people working for them. So they're going to give you the tools and everything you need in order to succeed. There's a lot of obviously different business lines within a corporation like Wells Fargo, so you can transfer to any of the business lines they have. And also as part of the program, you have to learn something, and you could learn Power BI, Alteryx, Python, Excel. Like I said, you can transfer to other business lines if you want to, and there's a lot of teamwork. These are some of the pictures. This is the campus I was working at. They also pair you with a line of business buddy, and this is basically who you are paired to in order to do some of the projects, et cetera, et cetera. Now let's get back into the market. Okay, so as we all know, the Fed is lifting rates to curb and slow inflation. One of the things that causes inflation, amongst a lot of things, is consumption, hiring, and productivity. So last Friday, the employment report came in, the unemployment report, and it came in at 3.5%, lower than August 3.7%, which is bad. Like we talked last week, we want negative numbers, we want a negative outlook so we can push inflation down. So that's not ideal. And also in the UK, the same story, unemployment rate came in lower than the previous month. So it's kind of not working in that sense. And that's one of the reasons that it pushed markets lower. The Fed guided for another 75 basis point increase in November to 3.75 to 4%. And also Russia, the Ukraine crisis, as we all know, Russia are doing full mobilization, I think it's called. So yeah, those kind of issues, global issues, are not good for markets either. Now, let's talk about the NASDAQ. The tech-heavy NASDAQ hit its lowest level in 2 years. But why? I mean, amongst a bad year in interest rates, because interest rates are bad for tech stocks and growth companies, Biden wants to put more restrictions on the CHIPS Act, and this is an interesting one. So chips made for artificial intelligence and supercomputing, those that are manufactured in the US by those companies. So if Intel, TSMC, or Samsung are making those chips in the US, they cannot sell them to China. That's the rule Biden wants to impose. And obviously China is a big market for everything. So that potentially could affect revenues for semiconductors. So the SOX, a semiconductor index, dropped 3.5% on Monday to its lowest closing level since November 2020. And on Monday, some of the chip losers, which are part of the NASDAQ, Qualcomm, Broadcom, and NVIDIA, were down 4.7%, 5%, and 5.2%. Now let's talk about GM. GM's buying a stake in a mining firm. So they invested $69 million in Australian mining firm Queensland Pacific Metals. But why? So the investment will give them a new source of nickel and cobalt. So a lot of the batteries for electric vehicles are made with nickel, cobalt, and lithium. And I think a few months ago, Elon Musk tweeted that if you had a lithium mining company, you were basically printing money. So what he's basically saying is that this is one of the resources you need for battery cells, and that's why they're investing in that company. The firm is developing a facility called Townsville Energy Chemicals Hub to process the materials. That's basically where the now the specific material they're working on is nickel laterite ore, which will be imported from a nearby Iceland, a French island off the coast of Australia called New Caledonia. And this will help GM meet its goal of 1 million electric vehicles by 2025. And this is one of the nickel plants in New Caledonia. Now let's talk about Google and Coinbase. So Google and Coinbase are partnering. So one of the biggest things about this partnership is the fact that Google wants to grow its cloud computing service. And as part of the partnership, they would accept cryptocurrency as payment for Google Cloud and its services. And as part of the deal also, Coinbase will move some of its applications from Amazon Web Services to Google Cloud. And it's kind of interesting how, obviously, as part of the deal, they want to bring some of the revenue even from paying in Amazon Web Services to Google. So Google obviously aims to grow its cloud service. And as of right now, and for the past 2 years, the market share for, even though they've been growing in revenue, their share of the total market for cloud computing has stayed the same. They have 9% of the total market with a revenue of 6 billion. That's for Q2. And total spending on cloud infrastructure services reached 178 billion in 2021. So they obviously want a bigger share of it, and it's only going to grow. So that's part of the reason they want to obviously go in forward in that sector. Now, this is an interesting graph. This is a market share for Q2 2020, and then I'm going to show 2022. Obviously, Amazon had 33%, Microsoft 18%, and Google 9%. And now this is Q2 2022. Amazon Web Services grew by 1%, Microsoft grew by 3%, and Google Cloud by 1%. So Microsoft has had incredible growth on their cloud service. I think last quarter they grew 40% year on year. So that's obviously incredible for them. And they're just going to keep competing. And I think it's kind of interesting how, as part of the deal, they're bringing customers from Amazon Web Services to Google Cloud. Now let's dive into Google's Q2 revenue distribution. So first, search advertising. This is for the quarter for Q2. They made 40 billion of just advertising on Google. They made 7.3 billion from YouTube. Google Ad Manager and Analytics, 8.3 billion. Google Pay, 6.6 billion. And Google Cloud, 6.3 billion. Now, this is an interesting thing to consider right now, is that in 2021, they had 61 billion in revenue. And this, obviously this year they had 69 billion, about what, 10%, 12% more. And then we're going to look at the net income. So, okay. So in net income, it stayed the same. They made more money revenue, but their income declined heavily. And that's one of the reasons why Google went down on their earnings. And what are some of the reasons why they had more costs? One of the biggest reasons is the fact that they hired 30,000 people in a year. They hired 30,000 people from 2021 to 2022. And that's obviously not ideal when we're heading into a recession. And when productivity is coming down and revenue is coming down, they have more costs now. And also, overall growth in revenues were less than expected. From Q2 2020 to Q2 2021, YouTube grew 80%. And from Q2 2021 to 2022, it only grew 4%. So growth was also down. And then currency fluctuations to 3.7% of revenue. As we talked last week, currency fluctuations are really important. And that's it. Any questions at the end of the meeting? Now with the economic perspective.
Alrighty, how's it going, guys? Cool. Got job openings, got the ADP versus the NFP, non-farm payrolls, unemployment rate, and PMI. All right, so first thing, we got the jobs report came out, job openings and labor turnover survey called the JOLTS. The Bureau of Labor Statistics comes out with that. So it comes out with the job vacancies, the quits, and the layoffs. As you'll see on the right, this is the job openings for July and August. Kind of shows that the total job openings went down from 11.1 million to 10.1 million, roughly. So job openings came down mainly because their positions were filled, right? So people got those jobs, not because they took the jobs out, but mainly because people got the jobs. So that the job openings they also fell to a 3-month low. So it means people got jobs, but the employers are not adding new jobs back onto the market necessarily. So the labor market still remaining strong though. right? Still a lot of people working. We saw the unemployment rate, that I'll talk about soon as well, is still at all-time lows. So they're still very strong, and there's little change between the hires and the separations, right? So total hires came in at 6.3 million, and then total separations, which is quits and layoffs, came in at 6 million. The ADP versus the NFP. So these are two kind of jobs reports that come out. They track payrolls and see who's gotten the job month over month, right? Or how jobs have increased month over month. So ADP, National Employment Report, it's an outsourced payroll processing firm. So basically, they process payrolls for very large companies, and from that data, they figure out the monthly change in employment. So they release their own. It's a private health company, so they release their own version of it. And there's non-farm payrolls, which is the government version, and that tracks these large corporations, but also smaller businesses. So traders and investors and the Fed use non-farm payrolls more over at the ADP. Right? So both came in good, and good for the economy, not so good for us right now necessarily, right? We want lower numbers because we don't want the Fed to raise interest rates as aggressively. So ADP came in at 208,000 versus 200,000 expected. And then the non-farm payrolls came in at 263,000 versus 255 expected. We see the biggest gainers was in education and health and leisure and hospitality. You got government was a loser for the month. It lost 25,000. So these are key economic indicators, right? A lot of investors and traders trade this, right? Because it affects the stock market, it affects the bond market, it affects the value of currencies, mainly the US dollar, right? And so it's very important, right? So in our situation, where we have the non-farm payrolls come in higher than expected in our current economy, what do you think would happen to the value of the dollar? Anyone have an answer? The value of the dollar is going to rise, right? Because since we kind of want the economy to go down, so we want people not to get hired as much, right? So it came in stronger than expected, which means that the Fed is likely going to be more aggressive. And if they're more aggressive in raising interest rates, that is good for the dollar, right? So what happened when the report came out, the stock market fell because interest rates is bad for the stock market. And then the dollar rose because interest rates is good or rising interest rates is good for the dollar, right? That's what happened. It's just basically said right now, investors anticipate the Fed would keep an aggressive stance towards interest rate hikes, which is why the stock market fell on the reports and the bond prices fell as well, and the dollar rose. So we also got the unemployment report, right? Came in at 3.5% versus 3.7% expected. Last month it was also 3.7%. So we saw a fall in unemployment rate, which also shows that we're still in a strong labor market, a very tight labor market, and the Fed is trying to get loosen the labor market to bring down inflation. Because with a lot of people employed, there's still a lot of demand. Demand is not something that the Fed really wants right now, right? There's a total of 5.8 million unemployed, and so that's 1.8 job openings per unemployed person, right? There's still a lot of job openings relative to unemployed people, right? So this means that the Fed will likely remain hawkish, right? So hawkish means that they're going to stay aggressive in raising interest rates, relative to dovish. What dovish means that they're going to relax. They're not as keen on raising interest rates, right? The market's still on the news, like I said. This is the September unemployment rate. The chart from September 2019 to September 22nd. Saw that huge rise during COVID, and then kind of just fell back down to pre-COVID levels, which we're at right now. We also have the PMI, which is the Purchasing Managers Index. So the ISM Institute survey, forgot what the M stands for, but they track manufacturing and non-manufacturing PMI. So they do surveys for managers in the manufacturing sector, also in the services sector, right? So that came out. Both of them came out. One of them came out worse than expected, right? Which is kind of indicates that, we're kind of in a slowdown, right? So the readings is that above 50, it goes from 0 to 100. So above 50 indicates that the manufacturing sector is expanding. Below 50 means that the manufacturing sector is contracting. Right? So, or at 50, it also means that there's no movement. So it's not contracting or expanding. So it came in at 50.9 versus 52.2 expected, right? It's also a key indicator because it gets released the first business day of each month. So it kind of shows the future direction of the demand of managers, or the demand the managers think that they're going to get in the future, right? It tracks the orders, the production, the employment, the supplier deliveries, and other inventories. So the non-manufacturing came in at 56.7 versus 56 expected. So it came in a little higher. So showing that kind of the services sector, I guess, is still strong relative to the manufacturing sector. That's it for me, guys. You guys want to add me on LinkedIn? Go ahead.
Hey, Glenn. All right. All righty. So let's get right into mergers and acquisitions. All right. So I'm going to go ahead, steal some slides from Juan Carlos here because he covered IPOs towards the beginning of the semester. And this week is all about IPOs. So an IPO is an initial public offering when a private company offers shares in public markets for the first time. This allows companies to raise equity capital from investors. So in 2012, Meta went public and raised $16 billion, breaking the record for the most money raised by a tech IPO. The next several months, about 40%. IPO performance this year, 87% of the companies who went public last year are below their IPO price. We're going to see that later in the presentation as we go through some of the companies that went public. So on average, IPOs are down 40% or 49% this year, while the S&P 500 is down 23%. 2021 IPOs were about 149 billion raised. And so far in 2022, only 7.2 billion have been raised. It's probably a bit more now. The number is still a little old at this point. Falling stock prices mean everything looks cheap. Companies want to IPO when everything is expensive. That way they can boost their valuations. And then some investment banking division Q2 performance. You see JP Morgan and Chase down 36.8%, Goldman down 41% year over year, and Morgan Stanley down 54% year over year. All right, so let's get into some of the actual IPOs that happened last year. On November 9th, 2021, we had a company called Rivian IPO. If anyone is familiar with Rivian, it is a electric vehicle and battery car company. So they have two main vehicles at this moment. They have the R1T, which is their truck that's selling for about $73,000, and their R1S, which is their SUV, selling for about $78,000. So the timeline before the IPO in 2009, the company was founded. It was originally called Mainstream Motors. It became Rivian in 2011. 2017, after the company had been prototyping for quite a while, it purchased a Illinois auto manufacturing plant from Mitsubishi for $16 million. And then in 2017, it released its two products, the R1T and the R1S, or revealed them, did not release them at that point. And then in 2019, Amazon came out and invested $700 million into Rivian and ordered 100,000 of their vans by 2030. And so this is what the Rivian van looks like. think it looks pretty cool. So in 2019, April, Ford invested about $500 million into Rivian as well. And then in September 2021, Rivian delivered its first electric truck, beating everyone else. They were the first mover. The Tesla truck isn't out yet. I think the Ford truck is out now, but I'm not quite sure about the GM truck. And then Amazon amassed about 20% ownership of Rivian by October 2021. And then in November, Rivian went public with less than 1,000 vehicles ever delivered. So very much a company of the future, and not so much one that has been around for a while or even has that many cars out. And so we can see here, November 9th, it listed about $78 per share, and it opened at 106. About raised $12 billion, the most in an IPO since 2014. And then you had about 153 million shares listed, and it closed at about $103. And so I wanted to kind of show at the end of the next day, your top 4 auto manufacturers by market cap. You had Tesla, which is at $1.06 trillion. Number 2 was Rivian, the company that's only been public for 2 days at that point, worth about $100 billion, the second most valuable automaker in the United States, and then General Motors, and then Ford, 86 and $77 billion, respectively. You can see Ford there with their participation trophy since, been making cars for over 100 years, but you've fallen behind 2 EV cars and General Motors. And so now let's go ahead and go to the YouTube video I made with Tableau. Put it on double speed here. So we can see it's got market cap and you can see Rivian here in the green, way up there. This is only 2nd through 5th, so Tesla's not on here. GM there in brown. Lucid, it's another EV company that came out the same year, and then Ford. All right. So as you can see, Rivian's super high up there. A lot of excitement, especially on that 3rd or so day, but still 2nd most valuable company going into January there. It becomes the 4th most valuable auto company, and then even falls behind Lucid, as it comes out that they're having supply chain issues, and what was originally supposed to be 40,000 cars estimated out turned to 25,000. And then towards right around March, you start to see it fall again, because that's the 180-day after the IPO where Ford decides to sell and George Soros. So you can see right there the big fall. And then let's just go ahead and skip ahead here, because don't got that much time. We'll just go more towards the end.
Oh, yeah.
Yeah. There we go. So we can see here, your green company, Rivian, started out super, super high, went to the moon at about 150 billion.
Hey everyone, my name is Ilan as well.
All right. Well, so it's gone. We'll just go back to the slides if I can. Just one. There we go. All right. So, and then you might ask, like, why was Tesla not on that that chart I had there that I made on Tableau? That's because that's what it would look like, because Tesla is just so much bigger compared to all these other car companies. It's ridiculous, but that's the thing about Tesla. It's not just a car company. It's a technology company and a self-driving company and all the other stuff about Tesla. But yeah, so that's Rivian for you. Let's move on to the next company. It's Bumble. Sure, a lot of people here know about Bumble, but if you don't, it's a online dating app, kind of like the equivalent to Tinder. So it was founded in 2014 by a former Tinder employee. She left for some, not so friendly reasons with some of the head people at Tinder, and went ahead and made a more woman-friendly Bumble. Headquartered it in Austin, Texas. So it's a Texas company here. And in 2020, it had a revenue of about $582 million and was about 145 negative in terms of profitability. So this is what it looks like. You see the different accounts there, and I'm not going to really explain Bumble that much, but basically the whole thing about Bumble is the female messages first whenever you match instead of the male. So it's more female oriented is the idea here. And so on February 11th of 2021, it became listed on the NASDAQ. The ticker is Bumble, or BMBL. And valuation of about $7.7 billion, and raised about $2.5 billion at the time. And so year to date, it's down about 69%, not the greatest. And its market cap is about 4.7 billion. So, lost about 3 billion in market cap. But it's typically how it's been going with the recently IPO'd tech companies. And moving on to the next one, we have here Allbirds. It is a shoe and apparel company, eco-friendly. They make it off of sugar cane and like different natural substances, and no plastic or anything like that. The shoes have about 30% less carbon footprint. And in 2020, they had a revenue about 220 million. So there's one of their shoes there with a tree inside it. The ESG score and everything was a big help for the stock whenever it first IPO'd. The IPO date was November 3rd, 2021. Ticker is Bird. I think that's pretty cool. I think Bird Scooter probably was definitely wanting that one. I think they beat them to the punch though. And then valuation, about $1.4 billion. The stock was actually up 89% on the day it opened, and capital raise was about 300 million. So now it's quite a bit lower. Your stock price is down about $22 to $3.11. That's an 88% down all time. And the market cap is about 463 million. Keep in mind, they raised over 300 million on IPO day. So it's been pretty rough for Allbirds. They've had quite a bit of supply chain issues. Definitely seen a lot of consumer confidence kind of going away, as most of their shoes and apparel is pretty high priced. But the thing is, they're supposed to be environmentally friendly. But I guess when pocketbooks start hurting, people don't really care as much. And whenever stocks start going down, people that invested for highest ESG scores and also gains find out that it's just ESG score, and then so kind of leave as well. So some honorable mentions we had from 2021. Coursera, the online class LinkedIn stuff for those courses in the name. Roblox. Cool thing about Roblox, one of the very first investors on the first day was politician Nancy Pelosi. I don't know if she sold or not, but that was pretty cool. And then Robinhood. Fun thing about Robinhood, it's currently priced less than its cash reserves. So if you buy Robinhood, the market cap is less than the amount of money they have on hand, because they are losing money. And I guess people think that it's not worth the amount of money because they're going to go ahead and keep running out of that cash on hand. Coinbase is up there. Coupang, I think I'm saying that right. It's a South Korean company, basically like the Amazon of South Korea. Affirm is up there. So Affirm is a lending company. So you buy something on Amazon and then you can kind of spread that out based on 3 months, just paying it over time. Clear, the airport checking before you what is that, pre-check basically. Duolingo went IPO. SoFi, Squarespace, AppLovin, Compass, and The Honest Company all IPO'd last year. So if you guys want, you can follow me on LinkedIn. Yep. Thanks, Alex. All right. Up next is Scott.
When did they do attendance? Huh? Oh, okay. Do you want to do it now? Because I'm switching anyway. So, y'all tell me, do you need biodegradable shoes? In the last 10 years, how many shoes have you thrown away? I don't think I've thrown any away. I think I'm still wearing those same shoes about 10 years ago. Is our shoes really a major part of our?
It's less to make them, less carbon.
To make them. So yeah, but how much carbon does the shoe industry? I don't know. I could probably save all the carbon in my shoes by just canceling one flight, I would think. I don't know. I'd like to see the numbers. All right. So I wanted to finish up what I started last week. And so they gave me a little more time, so that's good. So just to repeat a little bit. So you got a decision. You've got a decision to make. Do you invest outside of the United States in the stocks? And now I'm going to talk about bonds, but on the stock market, if you invest outside of the United States, you got a huge decision to make. What do you do with currencies? So here's Toyota. Just to remind you, here's Toyota. If you bought Toyota 3 years ago, Toyota is up. It has made 14.6% a year. The S&P made 9% a year. So what kind of decision did you make? Good decision, wasn't it? You bought Toyota, it's up a lot more than the stock market. But in US dollars, it's only up 6%. So what kind of decision you make? You just lost money. So this is the big decision you make. Do I invest internationally? Jack Bogle, remember what he said? Don't waste your time. If you do invest, then you got to make a decision. So when you buy Toyota, what are you buying? You're buying a car company. You're buying a company in Japan. Does Toyota care about the Japanese economy, or is it so global it doesn't care? You have to decide that. But what's the third thing you're buying? The yen. Do you want to buy the yen? So what could you do? You could buy Toyota for $1 million and then do what? Sell $1 million of yen. And then you would have made 14 point something percent. That would have worked. But then what if you did that and then the yen came up? Then you'd be really upset, right? Then you could have made 20%. So you got to make that decision. Which do? You got to decide. Most mutual funds that you buy, what do you think they do? And I don't know the statistics, but I have a pretty good idea. The majority of them do hedge or don't hedge. What do you think? Fidelity, T. Rowe Price, what do you think they do? You think they do hedge? I would guess that none of them, very few. John's out there John can jump in. I don't think many of them do. We didn't with our mutual funds. Now, do the portfolio managers think about it? Absolutely. They say, hey, I want to buy these Japanese stocks, but I think the yen's overpriced. Could they hedge some of it? They probably are able to, but the managers I've seen in my career, they just buy international stocks. There's something you can look up. You want to Google something or whatever you're using. What if you want to buy international stocks, but you don't know anything about currencies? Well, there's something called a currency overlay manager. Have you heard of that before? So you say, hey, I want to invest internationally. I don't know anything about currencies. I tell you what, I'll invest internationally. I'll give you a list of what I own, and you buy and sell currencies to fix my portfolio. So you'll be my currency manager. Guess what kind of degrees those people have? Any guesses there? Economics, yeah, PhDs in economics, the ones I've dealt with. I hired one in the UK for our minuscule little $40–50 million portfolio. But we had some currency exposure, and we hired this. He was a PhD in economics. I don't know how well he did, but he sounded smart to me. Plus, he had a British accent, so that made him really smart. But sounded like he knew what he's doing. I certainly didn't know currencies. So you have that decision. Could you manage currencies yourself? You can. It's a little tough, right? With futures, and it's a little bit tough to do. You probably could do it yourself directly, but you're probably going to pay a pretty big price, just in transaction fees. But that's the decision you have to make as an individual investor. If you go to Vanguard and buy their international funds, I'm pretty sure the index funds aren't hedged at all in currency. They're just buying the stocks, and whatever currencies you have. Is it important? Does it make any difference in your portfolio? Is there a difference between making 6% and making 14%? Pretty big decision to make. Now, when I was at USAA, I was responsible for currencies, which is laughable because y'all know how much I hate currencies. But we only had 3 currencies: the dollar, the euro, and the pound. And so I called a major currency shop and I said, would you be willing to manage our currency book? And they said no. Now, when's the last time you called a manager to manage money and said, no, we're not interested? Anybody know why they said no? Any guesses? They're smarter than I am, which is not a big deal, but they know more about currencies than I do. This is their business. USAA, granted, we only had like $50 million. It wasn't a big account, but still $50 million. They can make some money off of that. And they said, no, we're not interested. No guesses? What was I not bringing enough to them? Currencies. Only had 3. Guess what their minimum I had to bring to them before they take the account? Any guesses? 5, 10. 10 is pretty close. 13. They said 11. Why 11? All right, so I'm going to give you a famous formula in finance. I'm going to guess none of y'all have heard this before, but y'all prove me wrong. I'd rather y'all pull me. Oh, we didn't switch. Sorry. How do we switch? Just a second. I'm not on the, yeah, that's probably, you think that's what the chat's saying? You're not sharing your screen? Professor, how stupid can you be? But y'all know how stupid I can be on Zoom. I set records for stupidity on Zoom. All right, so there's the numbers on Toyota. 14% return in yen, 6% in dollars. But if you're going to hire a currency manager, they want a lot of currency. So here's the formula. Y'all tell me if I've ever seen this before. It's the Grendel fundamental law of active management. How many of y'all have heard that before? You have? Where'd you hear that from?
The hedge funds in Austin.
Oh, on your intern.
Yeah, Anna and I Anna actually did a lot of that. But yeah, our hedge fund manager.
Did they use Grenold's name?
Yeah, they use it in the Stable Valley portfolio.
Yeah, you hear with hedge funds. Why with hedge funds? But because they're all quantitative people. So what is this formula? Essentially what it's saying is there's 2 things when you have an idea. So let's say I have an idea and it's a really great idea. It wins 80% of the time or 70% of the time. That's pretty good. 70% of the time you win. But you can only apply it to 2 assets. Does that sound like a good idea? You got a good chance of not doing well. But let's say if something works 55% of the time and you can apply it to 3,000 assets, then you got something to work with. And what this formula says, the number you hear a lot, I use this number a lot in my class, is 52%. What it says, if you can be right 52% of the time and apply it to a lot of things, you have a good portfolio to sell to the public. Where did the 52 come from? I don't know. Whoever did the math said that. But here's the formula. It's your quotient, your IC. That's how good your idea is. Think of it like your T-score or something like that. It's like, how good is this idea? How reliable is it? If your chances of being right is 50%, is that a good thing to work? Hey, I got this mutual fund. What we do is we throw darts at the dartboard, and whatever stock it lands on, that's what we buy. Does that sound like a good portfolio management technique? It works about as well as most of them, but yeah. Times the square root of breadth. What is breadth? How many ideas are you going to apply it to? So a good idea works, 52, 53, 55% of the time. A great idea does what? It works 55% of the time. You can apply it to US stocks, European stocks, Asian stocks. You can apply it to bonds. You can apply it to commodities. That's where hedge funds get excited is, hey, we discovered that our strategy works with commodities. We're going to add that. There's 50 more things we can apply this to. So a great idea is it works, and it works in multiple places. In fact, that's how some hedge funds test their ideas. Say, hey, do we have a good idea, or are we just lucky that it works in the United States? Well, let's go outside of our sample size. Let's see if it works in Europe. And they discover it works in Europe. Do you think they get excited about that? Yeah, wow. And then let's try it in Asia. Oh, my word, it works in Asia. My word, we got something. Their heart rate's like 200 or something. They're getting excited. It works, and it works in multiple places. There must be something there. That's pretty exciting. So see if you can bring this up in an interview, but you might want to read a little bit more about it before you do. If you interview with hedge funds, especially, they will know this. It's a famous formula. So think of the risk as the input, IR as the productivity of a strategy, and the value added as the output. At any given level of risk, the value added will be the IR times the risk. So at any time, at a given level of risk, an active manager can either seek to improve his productivity, you can get a better idea, increase the number of times he utilizes the skill, increasing the number of independent bets he makes. So you can either increase the idea or the breadth. The greatest is to be able to do both. If you can do both, you're going to make a fortune in finance. And remember, you only have to be right 52% of the time if you have enough breadth to apply it to. All right, that's it for me.
All right, so we have a little bit of updates. I wanted to share the sector classes. Again, we're going on week 3. So things should be getting pretty good now. I'm hoping to attend some of the other ones myself. All right, so here's the update on the Market Watch competition. A big change from last week. I think I got kicked so far off the thing, the computer doesn't show it. And so, it looks like Jackson's doing a real good job there. So either way, we got enough time left to make a move in the ranks. Did this. You want to speak anything on the shirt, sir? Okay, keep ordering them. I'm ready to get mine. As always, we got polos for sale before or after the meeting. Please support. And thank you for coming out. Again, we hope to see you next week.
Okay. Anyway. Yes, money. It's the only reason something
All right, guys, everybody's favorite part. Not mine because, I can butcher some names, so I apologize. But can I get a drum roll, please? Your first winner is Mari Murillo. I'm just going to say it like that right now. Apologies, but please come. All right, last winner for the night. Drum roll, please. Samantha Martinez. Please come down and see me. And then you guys showing up tonight. Appreciate you guys' time. See you next week.